Welcome, ladies and gentlemen. It's Edelmetall at the Precious Metal Fair in Munich, and with me here is now First Mining Gold, and for the first time, Dan Wilton, the CEO of the company. Welcome.
Thank you very much for having me. I'm delighted to be here.
Absolutely, and so do I, and thanks for taking the time, of course. Maybe you can give a short overview. What is the company doing?
Sure.
That we get an idea.
Yeah, First Mining Gold has a portfolio of really 6 main development projects, gold development projects in Canada. That have in total about 11 million ounces of gold between their 7.3 measured and indicated and 3.8 inferred. So one of the largest undeveloped gold portfolios in the world. All the assets in great jurisdictions in Canada, many of them past producing mines, really well understood, technically de-risked. So we are really focused on 2 main assets we're moving forward. One is the Springpole project.
This is where? Where is that?
It's located in northwestern Ontario, about 100 kilometers east of Red Lake.
I see.
Yeah, it's a big open pit project, 5 million ounce project that we just updated a PEA on and announced that a couple of weeks ago.
Okay.
After tax NPV of 840 million US.
Whoa.
This is one of very few projects capable of producing in the main part of its mine life in excess of 400,000 ounces a year.
Oh, Jesus, what is the capex for that?
Capex is about 800 as it's scoped.
Okay.
So sub $1 billion, which if you compare that against any other project capable of that size of production, actually makes it look, like a bargain by comparison.
Okay,
so,
super.
Yeah.
So we can call your company a little bit like a mineral bank, like a company assembling good projects for the right price.
Yeah, so I mean, to take a step back, our chairman, Keith Neumeyer, who's well known to people.
I just interviewed him an hour ago.
There you go. Well known to people in your circles. Keith's our chairman and is really the founder of First Mining. And it was Keith and a few like-minded individuals who had the idea to buy all these projects really at the bottom of the market, 2015, 2016, when many of the people running them had given up. And so they went through this process of accumulating like in a mineral bank. They bought 8 companies or projects in about 12 months. With great excitement and fanfare as gold went from 1050 to 1350 in 2016. And since then, the team's done a really good job of continuing to take risk out of these projects, but we've kind of come to realize when they chose those projects, they chose really good projects that actually deserve to be advanced. Projects like Springpole and Goldlund, that, with a little bit of investment, I think there's an enormous amount of value that we can surface. But most importantly, I'm sure you see this in a number of your other discussions you're having with people. I think we're setting up into an environment in 2022, 2023, when gold companies around the world are going to be looking for what are the projects they can build, because their own production profiles are going to be falling off a cliff. And no one's ready for it.
Absolutely,
but we have a portfolio that's perfectly set up to take advantage of that.
So it's like a play against time a little bit, I would call it.
A little. Sometimes it's difficult to be great, right? Being right and early sometimes feels like you're wrong, but I think that's exactly right. There's a great Canadian hockey player, Wayne Gretzky, used to say, sometimes you got to skate to where the puck's going to be, not to where the puck is.
That's exactly it. Like to assume the future.
That's exactly right. Yeah, it's a good way to put it.
Fantastic. So Springpole you mentioned. What are other projects which, let's say, could be capitalized on the next 3-4 years? Yeah,
so the other main project we're spending money on is Goldlund. And so Goldlund.
Goldlund, okay.
And that's a project that's in the same area of northwestern Ontario, kind of between Dryden and Sioux Lookout. So if you know where the Goliath project is, the Treasury Metals.
Treasury Metals,
yeah. We're basically contiguous to that.
Exactly, yeah.
And Goldlund is an open pit target. Not a lot of people know it because it was private in the last cycle in a company called Tamaka. So First Mining picked it up. We've done 40,000 meters of infill drilling on it, understand the deposit a lot better. Most recently have stepped out 10 kilometers to the northwest on these big regional structures and think we found another deposit up there. Don't know if it'll be as big, but certainly, on this property, 50 kilometers of strike length, there's lots of room to grow it.
That's a lot, gee.
But it's right now sitting the deposit at, 800,000 ounces of indicated at almost 2 grams, and another 870,000 of inferred at about 1.5 grams. So, well in excess of 1 million ounces, all in a very shallow kind of 200
It would be
meter
like
deep
open pittable, right?
Yeah.
Definitely.
And in probably the best place in Canada to build a mine.
Super. So what is money in the bank?
Money in the bank, we just put out our financials, Q3 financials, was about 5.7 at the end of September.
Burn rate?
Burn rate on G&A and holding costs of the property. Burn rate's kind of between 4 and 5 a year. And then there's a work program that's undergoing as we're moving Springpole forward. So that's our big spend this year. Coming up is moving Springpole through pre-feasibility. And filing an environmental impact statement and doing a bunch of the work to get there. So
how much money do you think you need for that?
We think to get from here to the end of next year, it's about $6.5 million.
So you have to finance.
We're at some point going to need to find some more money, but there's lots of different ways that we can do that with a portfolio like we have.
Absolutely.
We're starting to get into an environment where people are interested in partnering with us on some of our other projects. We have a lot of interest in good supportive shareholder base who are interested in supporting it, and we have a lot of interest in other ways we can finance potential asset sales and royalty sales and things like that we're exploring a whole gamut of those right now.
I mean, as you just mentioned, probably the producing mining companies are falling off the cliff. Maybe it's a bit too tough, but it looks a little bit like, because I think there was a study from BMO which predicted like a decrease in gold production of approximately 20-25% for the next 5 years.
Yeah, by 2025.
Years maybe, yeah. And I think that is a lot.
That's a lot. When you think about how are you going to replace the total productive capacity of the gold industry, known projects today is about 82 million ounces a year. So you're talking about having to find 20 million ounces of annual production. Well, that's having to find Barrick plus Newmont plus Agnico plus
and we
Kinross.
had nothing the last years.
Like
in the real big projects, I would call it.
Annual production. I'm not talking about finding reserves, right? So we're coming into a market where bigger producing companies are starting to look at those production profiles and realizing they're going to need more projects.
Well, definitely, because I mean, even if they would start tomorrow with exploration, it takes way too long.
I would tell you this. I think if you don't know where that production is going to come from, it can't produce by 2030. Would be my guess, right?
Voila.
If you're drilling
10 years is
if
like
you're
this.
drilling it today, it's probably 3 or 4 years to develop, even if it's a super great find. And then from there, probably 5 years to permit and a couple of years to construct. All of a sudden, you're at 2030, unless it's right beside your existing mine, right? So
if we calculate this 2030, we are already missing almost 800 million ounces then.
Well, by 2030, no, it's true, but by 2030, you do that same math that they did in that BMO report, and production from every mine known today, more or less, according to S&P's data, is about 45 million ounces. So it just exacerbates that cliff. It accelerates as you look further out in the next decade, which
really
just
hefty.
means that people are going to need to build projects.
And you're on the right space now because you have the projects. You're, let's say, ready to shovel.
We've got great projects and in great jurisdictions, many of them past producing mines with infrastructure. And I'll tell you, I don't think there's a better place in the world to build a mine than Ontario. So we're very, very happy about where we are. Except for our share price, which we're not happy about at all because it's too low. But
but I think that's a problem of the whole branch.
And developers particularly, right?
It is what it is.
And at some point,
this can change like overnight.
When people get to understand the strategic value of these properties, I think you're going to see that change overnight.
Absolutely. So. And you have the projects. It was a great final sentence. Thank you very much.
Excellent.
Dan, that was great. And good luck with that. And I would say keep it going.
Great.
And I think with the finance, it shouldn't be a too large problem with your shareholder base and Keith Neumeyer in the backyard.
Exactly.
And I think it's only a matter of time. We wait for, first of all, a better market.
Yep.
But on the other hand, I would say the big boys really have to take care for the future.
I think that's right.
Super.
Fantastic.
Okay. Thank you very much.
Thanks very much. Okay. Ciao.
Yeah, ladies and gentlemen, it was Dan Wilton, the CEO of First Mining Gold. And you heard it, the company assembled, like I would call it, like a mining bank, like a mineral bank, a lot of good properties and really well-advanced properties also. And they are in Canada, in the mining hearts, and nearby Dryden, they are in Ontario. And I think money is in the bank. They have to finance a little bit to bring Springpole forward, that's for sure. But I could imagine that a lot of the larger or mid-sized companies really will have a lot of interest in the next years in those properties. So check out the company. Thanks for watching us, and bye-bye from Munich.